And now we proceed to our first panel on investing in NFTs, metaverses, and digital assets. Leading the panel is Ms. Cheng Li-Ling, who heads RHTLaw's Financial Institutions and Technology Industry Group and Financial Services Regulatory Practice. Joining Li-Ling are Mr. Chia Hock Lai, Co-Chairman of the Blockchain Association of Singapore, Mr. Gopal Kiran, Global Head of Banking and Financial Services of Asian FinTech Unicorn Insider, Mr. Victor Tay, RHT Consulting Asia CEO and Council Member and CEO of China ASEAN Business Alliance, and finally, Mr. Ben Chester Chong, Off-Counsel for Financial Services Regulatory in RHTLaw. Over to you, Li-Ling.
Good morning, everyone. I hope you can hear me loud and clear. Welcome to today's panel. What is a metaverse? Most of us probably became curious with this term meta when Facebook announced that it was changing its name to Meta. The word meta is a prefix with Greek roots, meaning beyond or transcending. A metaverse may thus be understood to be a reality that goes beyond or transcends what we experience in the physical space of the universe. A metaverse being a virtual reality world where users can interact with people and objects and immerse in multi-sensory experiences of sight and sound is not new, but has come to the fore in our daily lives. We read the news about virtual plots of land being sold for tremendous amounts of money, of real-life global banks buying up virtual plots of land so that users can transact in virtual space to engage in e-games, e-sports, e-entertainment, e-commerce. The first evolution of the metaverse ecosystem has been brought about by a convergence of factors. First, the social isolation due to COVID has brought more people and businesses online. Second, the advancement in distributed ledger technologies like blockchain have brought about an explosion in the growth and value of digital assets such as cryptocurrencies and non-fungible tokens. And third, all in all, more goods and services are being distributed and consumed on digital channels. So all these are contributing to a new phenomenon, a new metanomics, as it were, a new social science by which we can study and observe the new economics of the metaverse. But before we proceed further, we would now like to poll the audience with a few questions about today's topic, which is on investing in NFTs, digital assets, and the metaverse. We do welcome everyone to participate in this poll as it will help us gauge the level of your interest and involvement in this asset class. So organizers, can we run the poll, please? Okay, so actually more than half, about 62%, have not actually bought NFTs or cryptos. About 40% have done so. Okay, thank you for participating in this first question. Can we run the second question? The idea of the poll questions was really to gauge audience involvement in this area. And based on that first question, I was rather surprised to learn that actually a majority of participants have not actually bought into NFTs and cryptocurrencies. So really, you know, you hear a lot about the hype and what the reality is about. So thank you for everyone for participating in the poll. We do welcome you to post questions in the Q&A chat. You can click the icon with the question Mark, on the right column, and then we'll try our best to address them. I'd like to start off the panel with Hock Lai. Hock Lai, to me, he's a futurist, he's a visionary when it comes to technology, and very good at explaining concepts and providing macro perspectives. So Hock Lai, I'd like you to share with us what will a metaverse look and feel like in the foreseeable future?
Thanks, Lei-Ling, for your kind words. In fact, if I look at the survey results, right, about 40% owns any crypto assets, whether is it cryptocurrency or NFT. To me, that is on the higher side already from the typical sessions I have. Because like if you look at the number of crypto addresses available, right, I think probably less than 5% of the world population are into this asset class. So with 40%, I think this is a highly concentrated audience. Back to your questions on the metaverse, I think for those who has experience in metaverse, right, currently most of the metaverse looks highly pixelated or cartoonish. So they are actually quite low definition due to the high computational power and technology needed now. And to have highly immersive metaverse is the technology is already there, just that it's not cost effective yet. And you need a very elaborate equipment and crew to operate that kind of high immersive metaverse. So for me, I foresee that in the medium term, right, the next 3 to 7 years, we could reach that highly immersive version of metaverse that is widely available. I foresee the devices like the Oculus will become highly miniaturized. They will go through how mobile phones experience that. I mean, like from the size of a brick, and now it is already very, very small. So that process will go through. I think there will be new clothing materials that will be invented that allows a haptic response, so that you can experience in a very intuitive way by wearing just a normal t-shirt, but that normal t-shirt already has the different kind of sensors built into it. And also that you no longer have to get the omnidirectional treadmill in order to walk or run. I think omnidirectional shoes will also be invented to cater to that kind of experience. In fact, I also expect there will be multiple metaverse for different purposes. There will be one for work, there will be one for play, there will be one for social, etc. And then things like, I think 5G no longer cut it. We are potentially looking at 6G already in order to have that low latency and high transmission rate, because the amount of data needed for a highly immersive, high definition metaverse requires a lot of data with very low latency. And the other possible future is also that I think the devices in the future will have very high processing power, so that some of the rendering of the 3D, right, will be done at the device level. And as for the longer term, I recently read an article. People are already experimenting with like brain-computer interfaces, which means that you don't even need any devices anymore. You don't need to wear anything. Everything will be controlled from the brain. But that might require a very invasive kind of devices, for example, some implants into your brain. So I'm not sure everyone will be comfortable with that, but a lot of the sci-fi movies already illustrated that. So that remains to be seen. But I think the future will continue to be very exciting. Thanks,
Thank
Lei-Ling.
you. Yeah, Hock Lai. So for people wishing to participate in the metaverse, right? How can one actually start to do so?
Yeah, actually, I mean, currently there are two main ways. One is through your browser or your app in your mobile phone. So these are typically your experience will be a very low definition version of a metaverse. Those who play Roblox, right, or your kids playing Roblox, right, those will be the kind of experience you will be seeing. For example, like recently JP Morgan, HSBC established their presence in the metaverse. Most people are experiencing that through the website on the metaverse that they build their presence on. For those who want a more immersive one, they can buy a VR headset. A very popular one is the one by Meta, the Meta Oculus headset. I believe they have more than 10 million copies now. 2 million during the Christmas last year. So you can see it's now highly popular. That one will give you a more immersive experience. For example, like Meta's Horizon World is one of that. In fact, some of the popular games are already ported to this version. And I also the other good thing about a lot of this metaverse is that they allow you to start building stuff on it. That's why it's called a creator economy, because you can build things on top of the metaverse that you have, or build new games. For those who have a little bit of programming skill, right, you can even build more sophisticated stuff. Yeah.
Okay.
Yeah, so these are the ways to participate in metaverse now.
Yeah, thank you. And for people who are wishing to invest in non-fungible tokens, what are some of the key investment considerations that they should take into account?
Yeah, so non-fungible tokens are not new. They have been there since 2017. Really took off in 2021, basically last year. So this is still a very new asset class. I always advise people, right, it's not just about investing your money. What is more important is to invest your time. That's why, I mean, in this space, we have what we call as a DYOR, do your own research. I think that is the most important thing you need to do. You have to check the websites, all the Discord chat groups, all the social media, to have a sense of the community, because a lot of the popular NFTs, right, very much dependent on the community. If the community support is there, the price will likely be there. And you have to monitor the price action very, very closely, because like in many of the NFT marketplace, for example, they will always list one of the metric called the minimum floor price. So that is that's a minimum price for the entire collection of the NFT. So you can see the trend. And then, of course, not even within the collection, right? Not all the NFT are the same, because NFT is about scarcity. So some of the collection items will be more scarce than the others. So you really have to, again, spend time to study. Having said that, right, NFT investment is also highly subjective. So I think one has to be very mindful. And I feel that currently it is still highly speculative. For those who are not willing to invest the time, I would advise you to avoid it. Or if you really want to get it right, one other way to save you the time to invest, right, do consider NFT index fund. I think there's a few in the market. So that's one way for you to like outsource your research to someone, the professionals, while spreading your risk to a basket of NFTs. Yeah.
Thank you, Hok Lai. Very good points. And on to other digital assets. So Ethereum-based platforms like Decentraland are already selling virtual plots that people can develop. What is your view on the future of virtual real estate, and how can investors capitalize on this virtual asset class?
Actually, like a virtual real estate is very much similar to physical real estate. I mean, you would have heard of this thing called location, right? It's the same thing for virtual real estate. And the other thing of investing in real world assets, like buy before the amenities surrounding the property is being built, it's the same thing. So you have to go in early. Again, same thing, like it's no different from like investing in domain names, right? Some people do invest in domain names. There will be some of the real estate that will be more scarce than the others. So it's almost like I would almost think that, for example, we keep coming across this term called Web 1, Web 2, Web 3, right? So Web 1 could be like your email address. So Web 2 could be your social media handle, like your Twitter handle. So Web 3 potentially, I mean, your virtual real estate in the metaverse could represent your identity in the future. So you can see that currently a lot of the real estate, right, the prices are very high because they are near some celebrity or some of the big brands. for example, Adidas has when they invest in their virtual asset, right, they choose the one that is almost the equivalent of District 9 or 10 in Singapore. So that one is very expensive. I think easily costs like half a mil. Those that are less known, right, you can get it for $5,000-$6,000. Yeah, so that's one thing. And also, I think a lot of brands already realize that by building their virtual real estate, they could improve the interactivity of this, because static advertisement don't have the interactive element. But a virtual real estate allows them to hold events, for example, on their real estate. So I think there's a lot of potential, but I think it is still very, very speculative now. I think we are at least like 5 to 10 years away from mass adoption. So really, I think there's a lot of room to improve, whether is it in terms of technology or the user interface. So again, I would advise people to be highly mindful of the speculative elements of virtual real estate. Thanks.
Okay. Thank you so much, Hock Lai. Thank you very much indeed. Gopal, would like to hear your views from a business perspective. As businesses look to capitalize on the tremendous growth in the metaverse economy, how should business leaders create a metaverse strategy, and what are some key considerations in developing such a strategy?
Thanks for the great question. And I can, all the great points from Hock Lai will lead to this question as well. There's a lot of hype in the market with respect to NFTs and metaverse. So I mean, rather than staying silent, it's better to try and test out, do a POC, and then see whether it's really applicable to you or not. So coming back to your question on what really needs to be looked at for companies to embark on this metaverse journey. So based on my experience of interacting with multiple industry stakeholders and business leaders, usually they look at some 5 to 6 different kind of parameters in order to analyze whether this is worth to go there or be a laggard at the moment or a leader at the moment. So the first one is your business proposition. Like what should be your business model for your overall organization? If you wanted to spend some time interacting or transacting or socializing in the virtual world, what kind of customer segments you want to tap or target? Either you want to serve this kind of Generation Z kind of a customers, offering some unique kind of propositions with respect to experience or products or services. That's going to be key. The second one is like what kind of role you wanted to play. Are you just want to be a participant in the whole metaverse community, or be a service provider or a solution provider? That's also a key strategy you look at. And the next dimension is, I mean, I come from a background of banking and financial services. Every time I talk of financial services, 2 key elements come into play is how do you manage the regulators? How do you manage the risk component? So you need to have a proposition on what's our story, how do you make sure we comply, although it is not regulated at the moment, but how do we make sure we have all the fundamental pieces in place, like the eKYC or the KYT, know your technology, know your business, or AML, CFT considerations. How do you make sure there is no fraud that happens in the whole, these kind of conversations need to be in place. And the other dimension we need to look at is your talent. Do you have enough talent within your organization to embark on this journey? If you don't have the talent, how do you build the talent within the organization, or how do we bring the talent from the external world? So that's another dimension. The fifth dimension is mostly around your financial resources. So if you have $100 with you, how do you best strategize to spend this $100 on your BAU or your existing business, or you want to do a prototyping of investing in these new areas or new lines of business, being a fast mover in this emerging sector. And then the last dimension is have a look at what your competitors are doing. So these are some of the dimensions need to be looked at by the business leaders. Come from the business strategy, risk and regulatory, your marketing strategy, your talent in-house, and then looking at your competitor views. So all this needs to be considered in order to make your strategy for moving into metaverse. So if someone has passed through this phase and then they've built a strategy, the next step comes in like how do you actually execute this strategy. So I think I will take the similar approach of any other entity who wanted to embark in a new business, like create the business strategy and the business model, then create a POC with some predictive kind of KPIs you wanted to measure out of this the whole exercise, and then the fine tune the whole process. So it is like start small and grow big, learn in this process. So that would be the approach I would see for big brands to enter into this whole metaverse community.
Thank you, Gopal. And in Southeast Asia, what are some of the areas that can be improved for us to realize maximum potential when it comes to digital life?
Right. Again, another great question. So based on my experience of working in Asian markets for around 8 years, usually to promote digital economy or a digital kind of environment in any country, we usually look at some 4 to 5 different parameters that are required. So the first one is like the capital. Do we have enough capital within a country to promote these kind of investments or push towards digital adoption? It could be from various stakeholders in the industry. It could be from banks, it could be from the fintechs or SMEs or startups, or everyone in the ecosystem. The second parameter is like from a regulatory concept or guidelines perspective. In order to push, say for example, in ASEAN markets or Southeast Asia, there's a lot of unbanked or underbanked population. Many of them live in rural areas. So connectivity is going to be a primary issue. If you want to push a digital payments in a remote area, it's not going to help. So what kind of alternatives we have, how we can increase the merchant acquiring, how we can do offline payments, how we can do bulk payments, or how you can enable voice-driven payments. So these are multiple models. And then this regulation should come at speed and on time in order to push this investment. And then the talent, I think even though, I mean, all of us who are in the panel and many of the members who are attending this session, I think we are all ambassadors of digital world. But there's a lot more people out there who require a lot more education with respect to understanding of this new concepts, a lot more work to be done with respect to financial literacy. So the other parameter which might help to push moving the digital world or bringing a digital life is how do you embark or increase the talent within the countries to promote this digital economy. And then the fourth important parameter is the ecosystem. So pushing everyone into the digital world is not a one-person agenda. It's not me, you, or anyone in this panel or others, but it's an ecosystem play. How do you have all the stakeholders within the ecosystem to drive what kind of role everyone has to play in order to achieve the common benefits and objectives of moving to digital life. So I will pause there with those dimensions. Yeah.
Thank you, Gopal. All very good points. In fact, I think I will summarize all the key points of our panelists. I'll put it on my LinkedIn later on. So because we are, time is so short. But thanks very much for the very good point forms that you've given, Gopal. Victor, moving on to you, would really like to tap on your investment banking and your tech M&A background. What are some of the areas in Southeast Asia when it comes to digital life that you see investment opportunities in?
Yes, thanks, Li-Ling, for the question. Southeast Asia, as what Gopal highlighted, because very much we saw the infrastructure readiness and also in terms of the internet penetration, we actually had most of the countries already at 80%. I think we had only just 2 other countries, Laos and Myanmar, that's merely just 50% or so. So with that, I think that formed a basis where I think many of the companies are exploring on some of this digital investment as they go into. Although some part of it, what Gopal highlighted, policies, digital trust, some of this later on we'll dive deeper if we have time, are some of the hindrances that we are looking at. think most of the investors here, I think very much, if we just looked at on the worldwide and also some of the strategy in the last 2 years, right? So given most of the listing, a lot of them are looking for news stories. And very much you find digital space as well as the metaverse and also cryptocurrency as well. Interestingly, one of the most great adopter of this, or maybe one of the most campaigner of this were banks. So financial institution actually goes in quite a lot to actually use this and put this as an alternative investment. Although I think we did see for this year and just last month, Fitch rating did come out and actually highlight that while banks are adopting this, but do note that some of this do carry risk for Southeast Asian banks, notably they highlighted. And I guess if we go too deeply into this, some of this might result in an issue in terms of the rating. I guess this is what Fitch was actually trying to aim at when they declared this report. On the three possible trends that we saw some of those companies that were going into, they started to look into some of the fintech companies to acquire. I think just for the last 2 years, you see records numbers in terms of M&A. I think just for 2021, the M&A record for Southeast Asia registered about 138 billion or so. I think one of the record year we ever had. And with this wise, I think we see numerous of them actually expanding into looking at metaverses, some of the service company, gaming company, so the NFTs, some of the decentralized financial type of blockchain companies, etc. And you also see record number of companies going into investment as well, driving into crypto players, etc. Right? So within here, I think some of the businesses that we spoke to highlighted to us that I think rather than to just go in for a spray gun approach, I think many of them actually take a ready, fire, aim approach. They basically look at it and say, what is their strategy intent? And their strategy intent wise, are they looking for possibly disrupting existing market? Because they'll be disrupted. Why not acquire one, which actually can augment their services? Or number two, perhaps how they could actually, in terms of acquisition of talent in here, I think since this is a new area, and I think there's a shortage of talent, they actually go into to acquire talents in here. And others actually look into finding adjacent sectors that they actually looked into. And of course, the last part, I think there are intellectual properties that they were acquiring, looking into, and therefore hiring. So in this case, I think we do see, I think many of them actually started designing the strategy intention. Next, look at some of the distinctive technology, and particularly some of those with intellectual properties valuation from brands, etc. that they look into. And I guess this very much allows them to go into, especially their traditional company, a beachhead into a new area, and therefore gives them a certain story to spruce up. And yeah.
Right. So thanks, Victor. You've shared some key points about strategies for M&A success as well, in terms of the approach and the need for talent acquisition and so on. Could you as well maybe highlight where are some of the key challenges relating to investments in digital assets?
I think some of the challenges here, very much, I think Gopal highlighted, I think policies, and government policies is one part of this. I think we saw very much, I think in the last, just a couple of months, just for this year, right, when issues where fintech or some of this get into problem where they were scams. So who do you get responsible with? And very much, I think consumers or even their customers very much tend to look at the lender or even some of the provided with services. So this very much has not been concretized in terms of the policies and regulation is one. Second part, valuation. Valuation of that product that Hotline much earlier on said about within certain alleys, and we see the average of some of those properties. I think if we do an average, it's about 16,000. Most of those in the parcel of. But when it comes to valuation of that, it is still there's no actual benchmark. There's also inability if you need to actually have a quick liquidation, how to actually liquidate this and actually have solvency in here. So this will become an issue. And the third part, I think we see quite a few of this acquisition when it comes in. I think the extent of their valuation actually varies quite a lot from I think the lowest bidder to the highest, right? The valuation could be even 3 to 4 times differences in here. So I think these were the challenges. And very much, I think, to write on what Gopal highlighted, I think unless some of this digital trust issue has been resolved, and I guess this will also mend down to the business and also the consumer, when they actually can find, given these issues where if there comes a governance issue, where there comes with some of this risk of this asset class, or even some of it, we heard about rare cases, hacking into who is accountable, what is responsible. And if not, I think we do not have quite the entire assurance of consumers and the whole market adopting this. Yeah.
Okay. Many key points shared by Victor here on digital trust, on how this new economy is just, again, not just unfolding new opportunities, but also new types of risk, and how risks are now being allocated and so on. Moving on very quickly to Ben then for his legal perspectives. Ben, please share with us potential legal issues relating to the metaverse would include issues such as data protection and privacy, intellectual property rights, and personal harm, like the sort that perhaps Victor has just mentioned, but also in terms of harassment and injuries. Could you elaborate on these issues, and what can people do to better protect themselves?
Okay. Thank you very much, Li-Ling. The metaverse has definitely generated much interest. So I thank my fellow panelists for giving a flavorful introduction of the metaverse and investment trends in this area. So there are a number of potential legal and regulatory issues in the metaverse. Firstly, it would be data protection and privacy. The metaverse will result in new categories of personal data for processing. So it seems that virtual reality platforms will be quite invasive, as companies will be able to monitor facial expression, physiological responses, and biometric data. So hence, the development of metaverse platforms raises many unanswered questions. Who will bear responsibility for data processing? Who will be responsible for lost or stolen data? How and when will users provide consent for data processing? So the EU General Data Protection Regulation could arguably apply to the metaverse. So in addition, through the use of 3D cameras, LiDAR sensors, and microphones, VR glasses, they will also process a range of data about users' private environment in the real world. So for example, about their private homes or family members. Such data may also include special categories of personal data as defined in Article 9 of the GDPR, but either way requires special care and processing. So in particular, the principles of data minimization and purpose limitation play an important and essential role in the processing of personal data in the metaverse, not only on compliance grounds, but also for reasons of trust, because the metaverse will only be accepted by users and become successful if they can and wish to be in the metaverse. Secondly, it will be intellectual property rights. For example, in the real world, when it comes to purchasing a piece of art, property law dictates that ownership is twofold. Firstly, ownership can be attributed in the actual physical artwork. And second, the buyer may or may not own the intellectual property of the artwork, depending on the terms of sale. But what kind of ownership is precisely included in a transaction of digital art? It may be argued that ownership in the metaverse is nothing more than a form of licensing or provision of services. In such instances, true ownership still lies with the owner. This may mean, for example, that the buyer cannot sell the item without permission from the true owner. So platforms and services will need to build technical defenses and contractual mechanisms in, such as the terms of use, to protect their users. The question then is how brands and individuals can then protect their copyright as the metaverse expands, right? So to give just one example, a digital artist, Mason Rothschild, created Meta Birkins, which were NFT versions of Ahmed's famous Birkin bags. So Ahmed had sent him a cease and desist letter. However, the Meta Birkin NFTs are still available on some platforms. So as the metaverse provides new opportunities for misappropriation of intellectual property, content owners and licensors should consider the appropriate scope of monitoring such platforms and enforcing their rights. Thirdly, it would be identity and virtual crimes. In the metaverse, identity is even more important With account takeover, for example, someone is using a person's digital persona and pretending to be that person. Essentially, this can be a risk to one's reputation or even incur liability. Such problems are fueled by a growing sense of impunity among bad actors who feel that they can use the anonymity afforded by the metaverse to get away with anything. How then can we make an avatar responsible for their actions in the metaverse? So this would be complicated because it would mean that we need to attribute a legal personality to the avatar, according to them rights and duties within the legal system, allowing them to sue or be sued. And what kind of standard and criteria need to be in place to distinguish between a legal avatar and the true person who operates the avatar? So on this front, many metaverse projects have terms of service that purport to govern user conduct contractually, allowing remedies for violations such as banning from the platform and confiscation of in-world assets. For example, the virtual world Roblox both require users to actually accept terms of service before entering the game. So finally, there's a risk of personal injury in the metaverse. And as the metaverse requires the use of a head-mounted device, thus the user will not be able to see the real environment that they are in, which makes it probable for users to trip over or fall down a set of stairs, which may cause serious physical injury to the user and people surrounding them. So thus, unless the terms of use of virtual reality platforms contain a similar waiver of liability, lawsuits for negligence and product liability against metaverse developers will become unavoidable.
Thank you very much, Ben. Very good points there as well. So terms and conditions, legal contractual documentation, very, very important to ascertain the rights and obligations of the ecosystem participants. Ben, very, very quickly, potential legal issues relating to non-fungible tokens.
Okay, thank you, Lily. So just 3 broad points for this. NFTs are a component of the metaverse and Web 3.0, as is certified ownership of unique virtual goods via blockchain technology, right? So firstly, the presence of the distributed ledger does not actually change the fact that the underlying asset for the NFT always exists somewhere else off-chain, right? So when an NFT is purchased, the purchaser is actually buying the token itself and not the digital asset that is linked to the token. The link between the token and the asset does not automatically lead to the transfer of rights or obligations in the asset, because that occurs as a matter of contract between the buyer and seller. Without the terms of the contract, it would be difficult to sue an individual for breach of contract if only the token and not the digital asset is transferred. So an example of this would be Jack Dorsey's original tweet, which was auctioned on the Valuables platform. So secondly, an underlying asset that is tokenized also exposes the token issuer to different types of regulation. So last month, the MAS, the Monetary Authority of Singapore, has explicitly said it will not regulate the NFT market in Singapore as it opted for a tech-neutral stance, although it urged consumers to exercise extreme caution. So in terms of the Payment Services Act, which regulates cryptocurrency service providers and digital payment tokens, it appears that it does not apply to NFTs due to the non-fungible nature of NFTs, which only allows for an exchange of specific goods. Then if we move on to the Securities and Futures Act, so the offers or issuance of digital tokens may be regulated by the MAS, provided that such tokens constitute capital markets products as defined under the Securities and Futures Act. So it would seem on first blush that limiting features like non-fungibility would seem to suggest that NFTs do not qualify as a capital markets product. But it is possible to argue that NFTs would fall under the definition of a capital markets product if the fractional parts of an NFT are issued, known as FNFTs, right? So the US Securities Exchange Commission has stated that issuing FNFTs would be considered investment contracts under US securities law. And thirdly, let us talk on the issue of taxing digital tokens in Singapore. So there are recent developments. The Inland Revenue of Singapore IRAS has issued 2 guides on the topic, one for goods and services tax in November 2019 and the other for income tax in April 2020. So where GST is concerned, IRAS has said that the transfer of NFTs, such as those that represent ownership rights to specific property, example, your intellectual property or digital artwork, will remain a taxable supplier of services, as such tokens are not fully interchangeable for use as consideration. But where income tax is concerned, the guide does not specifically cover NFTs, but it only covers payment, utility, and security tokens. But on 11 March 2022, Finance Minister Lawrence Wong clarified that individuals who derive income from NFT transactions or from trading in NFTs will be subjected to prevailing income tax rules. So purchases and sales of these tokens will be subject to scrutiny to determine whether any gains or profits made out of their realization should be taxed as income or tax-free as capital, because Singapore does not tax capital gains. So if an individual or company creates and sells NFTs tied to an underlying asset, it would seem that this would be a normal sale transaction and subject to income tax. So these are some of the possible regulatory issues that NFTs may raise. Thank you very much, Li-Ling.
Thank you so much, Ben. So much to cover, right? And actually so interesting at each point. So from the legal perspective, I think it behoves everyone to be aware that the legal and regulatory requirements for each jurisdiction is actually very important, and you need to be aware. So please do reach out to legal counsel like us for advice. Concepts like NFTs, whether they form capital market products, whether they are a commodity, whether they are a digital payment token, this interpretation could differ from jurisdiction to jurisdiction. So always proceed with caution if you're entering into these business lines. We are running short of time, but would really like to give some opportunity for the audience to pose their questions. And I believe there are already 2 questions which I think Hotline might be well placed to answer them. Hotline, if you don't mind just summarizing the question and giving your response. Thank you.
Thanks, Li-Ling. I think there's a question on Metaverse asking about which country has the most take-up rate, what are the utility, what's the size, what are the benefits, right? I'll answer very briefly. I think if you look at it, right, most of the brands that are into a Metaverse now, they are the brands that has large consumer, retail consumer pool. So the likes of Adidas, and also some of the celebrities with a big fan base like Snoop Dogg or even Paris Hilton. So and for the banks like HSBC, JP Morgan, again for them is they also have large consumer base, and very often for them is really like to be seen as one of the most tech progressive kind of company to attract recruitment, for example. So those are the things that are providing utility value for this kind of investments. The second question is about, I'm wondering whether you could share some investment-worthy products you have seen, and why you believe they are innovative business potential and value. Okay, typically I don't make any investment advice online, but I could share that some of the projects that I invest typically are those I believe will be there for the long term. For example, like last year, I invested in a company that are providing all the crypto data feed to the institutions, because I think there are now many projects. Most of them will fail, but those that are providing the underlying infrastructure or supplementary support services are likely to last in the longer term. Thanks. Okay. Thank you very much, panelists and audience who had submitted your questions. Really, unfortunately, the time has really run out on us. So we hope that you enjoy today's panel and you will continue to stay on for the rest of the panel discussions. Thank you again to my esteemed panelists. Thank you very much.
What an insightful panel that was. Thank you so much, Li-Ling, Hock Lai, Victor, and Ben, for sharing on investing in digital assets, even in the metaverse. Truly, we are seeing the future of investment.